Hello, financial mathematics students. Today we're going to be going over the Unit 7 activity. So if you're done the rest of the unit and you're on Unit 7, then let's go ahead and get started. You can go ahead and move to page 5 of 7 here, and we'll go ahead and get started from there. It says, and we're going to start right here, just going to start right away on task 1. So businesses aim to make the most profit by reducing costs and increasing revenue. A business model is a step-by-step plan that describes the company's strategies and the projected costs, revenues, and profit. In this task, you will analyze a business model and create one yourself. So one of the key things here I want you to know is that there's an important equation that you need to know regarding profit, revenue, and costs. And that's that the profit equals the revenue minus the costs. Profit equals revenue minus costs. And that's going to be an important factor. So you should probably write this down. Profit equals revenue minus costs. Okay, we're going to be using this formula a few times, but it should kind of make sense. Revenue is the money you bring in. Cost is the money you have to spend for your business. And if you take how much money you bring in and you subtract out the amount of money that it costs, that'll give you how much money you make or your profit. Okay. By the way, if your cost is more than your revenue, then you actually lost money. So that's one thing that can happen as well. But let's go ahead and get started with some of these questions. Which 3 items directly contributed to increase profit? So how do we increase profit? Well, we increase revenue and we decrease costs. Okay, so providing just enough inventory to satisfy demand for a product. Yes, this is true. This actually is called just-in-time inventory. So when you have inventory where it's just enough to take care of demand, that's just-in-time inventory. And that actually is part of what got us into such a big supply chain problem when the lockdown happened for COVID, right? So that just-in-time inventory is good for a business, but it's bad for the overall supply chain if anything happens to it. Selling at low prices, no, this will not increase your profit. And selling at low prices does not increase your profit. That'll decrease your profit. Buying inventory in bulk rather than individually, yes. If you buy your inventory a lot, you get a discount usually. Selling a product similar to a competitor's product. No, you don't want a product similar to someone else's because then they can compete with you. So you want to have a product that's different than everyone else's. Advertising and marketing. Yeah. If you successfully advertise and market, then that'll help you make a profit. Hopefully that makes sense. Okay, question 2. Analyze the business model that Carrie has created for her business and determine which actions are helpful in making her business profitable. Okay, Carrie owns a chain of furniture and home appliance stores. She has noticed that college students and newly married couples are often disappointed in the furniture they can afford. Her business idea is to create a new line of beautiful, durable furniture at low prices. Because she already owns stores, she has set a process for operations in place. Her designers will work with manufacturers to create a plan for reusing existing production processes. They will buy materials and inventory in bulk. They will use flat packaging and large volumes. Her stores are located close to the major cities. Recently, Carrie's competitor, which is known for its line of kitchen appliances, has introduced new kitchen products. This company has also started giving coupons to customers. After noticing the competitor's popularity, Carrie's marketing team launched a similar marketing strategy. They introduced new kitchen products and they promoted them using various social media platforms. Okay. We actually didn't need to read all that because this is all pretty obvious stuff. Using the information about Carrie's business model, drag each attribute to Carrie's business and its description. Okay. Sell beautiful low-priced furnitures. Does that tell you what type of industry, the purpose of the business, target customers, or how the business can increase profits? Well, this is the purpose of the business, is to sell furniture. Low operation costs. Is that the type of industry, the target customers, or how the business can increase profit? Okay, well, I think it's pretty obvious this one, okay? See if you can put the other two in the correct spots here. Hopefully it's obvious. Okay. Now this is the important part here. And remember, this is where our equation comes into play. Profit equals revenue minus costs. Because what's going to happen here is we're going to use these equations to help us find which type of material we should use to increase profit. Okay, so Carrie is considering 3 different types of materials for her chairs. Depending on the price she sets for each chair, the costs and revenue for each type of material will generate different costs and revenue for her business. In the functions in the table X is the price of each chair. The functions give the revenue R and the cost C that Carrie's business can expect in a year at a given price for the item. Use graphing tools to examine the graphs of each set of equations, then select the correct answer for each drop-down menu. So the main thing I want to see here, we're going to be using that equation that we showed earlier. Okay. Remember, the profit, P, we'll call it P of X, equals the revenue. So the revenue equation in each of these is R of X minus the costs, C of X. Okay. So we're going to find the profit equation for each material. So let's start with material 1. We're going to do the revenue minus the costs. The revenue minus the costs. So that's going to be 200,000 X. And you know what? You should write all this down because honestly, if you write all this down, it'll make a lot more sense. So here's our revenue equation. And we want to minus the cost equation. So we're going to minus this equation here, the cost equation. So that's 5 million minus 20,000 X. Okay. Now we can combine some like terms here. I'm actually going to put this X squared part in front. 2,000 X squared. Negative 2,000 X squared. Now, I also want you to notice that this negative goes to both the terms in here. So that's actually going to make this a plus 20,000X. And we also have a plus 200,000X. So that's going to be plus 220,000X. And then we have a constant of minus 5 million. Minus 5 million. Okay, so for the first material, this is our profit equation. Okay, negative 2,000X squared. I'm going to write this down. Negative 2,000X squared plus 220,000X minus 5 million. Okay, so what we're going to do now is we're going to go on Desmos and I'm going to put in that equation. I'm actually going to put it right here. So negative 2,000X squared. Now, if you don't have Desmos open, I suggest opening it up. So here is the equation. Here's the graph of the equation. Now, one thing I want to do here, I've already done it on mine, but if you go to the wrench here on Desmos, you want to change your axes quite a bit. So your x-axis, you want to probably change to like 100 here. For your y-axis, you want to change this to like maybe like 10 million. Okay. Once you've done that, it'll be easier to see what's going on. So this is the first equation. So this is the first profit equation from material one, which was material one, again, using this. Okay. So that gives us this graph here. Now, what can we learn from this graph? Well, first thing I want to look at is the vertex. The vertex in the case of this first material is 55, comma, 105, 0, 0, 0, 0. Okay. So that's 1,050,000. Okay. So what is that telling me? That's telling me that if she sells at a price of 55, then she'll gain a maximum profit of 1,050,000. Okay. You could see that from this profit graph, she will earn a profit. Let's also look at the x-intercepts here. So if she sells at $32 or at about $77.91, this, anywhere in this gap represents a profit. Okay, so if she sells more than 32 but less than 77, then they're in the profit. Okay, because it's above the x-axis, above 0. And to maximize the profit is the vertex. So with this material, to maximize the profit, you want to use the vertex here. Okay, so that's an important point. So for this first material, the max profit is this. Okay, for the second material, I've already done it here, but I'll show you the work anyway. So this is for material 1 here. Now for material 2, again, we're going to use this revenue equation minus the cost equation. So this is for material 1. This was for material 1. And then we're going to do material 2, again, taking the revenue equation. Minus the cost equation. So minus 4 million minus 10,000x. Combining, distributing this negative and combining like terms gives us negative 1,000 x squared. I like to put my x squared first. This 160,000x can combine with this 10,000x. And actually this 10,000x will become positive because this negative and this negative combined will make that a positive. So that's going to be plus 170,000x. And then this negative goes to this, so that's minus 4 million. Okay. Go ahead and put that graph into Desmos. I've already done it here. And you can see this equation is actually much nicer. Okay. So for this second profit equation, she gains a profit if she sells. So for the second material, I'm going to write down these numbers. She'll earn a profit if she sells for $28.21, all the way up to $141.80. Oh, 79 cents, sorry. And the maximum profit she could earn is right here. If she sells at $85, she'll earn a profit of $3,225,000, which is pretty good. That's much better than material 1. Material 1 had a max profit of $1,050,000. Material 2, a much larger profit, more than triple. Okay, so material 2 seems to be a better choice out of these two options. Okay, now let's go ahead and look at the last material, material 3. And we're going to be using this revenue equation, 54,000x minus 270x squared. So that's the revenue minus the cost equation for material 3 is 2 million minus 5,000x. Okay. Distribute the negative and combine like terms. That gives us negative 270x squared. Plus this negative makes that a plus. Combined with this, that's going to give us 59,000x. And then minus 2 million. So let's go ahead and put this equation in Desmos. So that's negative 270x squared. What was it? 59,000x, 2 million. 59,000x minus 2 million. Okay, so for this third material, okay, we have a much wider graph. She earns a profit if she sells for, so material 3 for $41.95, all the way up to $176.57. Okay, and the maximum profit is not as much as the others, right? Well, let's see, how much is this max profit here? Zooming in. The max profit is 109.26, comma 1223148.15. All right, so the max profit for material 3 is 1,223,000 and change. Okay, so material 3 looks like it's better than material 1, right? Better than the green graph. But I think material 2 still wins the day, right? Because it has a much higher maximum profit. You see that? Okay. So material 3, what's good about material 3 though, is it has a wide range where she'll earn a profit, okay? A very wide range of prices where she could earn a profit. So that's good for material 3. But material 2 gives you a higher maximum profit. Material 1 is the dud. It doesn't have a good range nor a good profit. So it's definitely the one you don't want to use. Okay. So material blank can deliver the highest profit. So you need to answer. I already gave you the answers for these. Hopefully you're paying attention. If not, look back at the graphs. Material blank earns a profit for the widest range of prices. Again, the graphs give you that answer. Go ahead and answer that. Okay. Based on the results we just got, which 2 statements correctly interpret the actions the business should take? Okay. If material 2 is used, Carrie will earn a profit if she sells for more than 150. So material 2, again, that's the red graph. Will she earn a profit after 150? Well, no. 150, that's down in the negative. So that's a no there. That's a no. Material 1 is used, Carrie will earn a profit if she sells for lower than 50. So we're looking at material 1, that's the green one. Below 50, will she earn a profit? She sells her chairs for lower than 50. I mean, there's some prices below 50, looks like. But I don't think that's what they're looking for. Material 3 is used. Carrie will earn a profit if she sells chairs between 45 and 160. So that's the blue graph between 45, which is definitely in profit, and between 160, that's definitely within the profit too. So I'm going to say that one is correct. If material 2 is used, Carrie will earn a profit if she sells between 130 and 120. So material 2, again, that's the red graph. Will she earn a profit? Will she earn a profit between 30 and 120? So one of these 2 last answers is correct. You need to figure out which one. Okay, so I'll leave that up to you. Again, look at the graphs and see which ones are still in the profit. meaning above the x-axis in that range. So material 2 or material 1. Okay. Question 3, select an industry from this table. Okay, you get to pick one of these: agriculture and mining, consumer electronics, blah, blah, blah. I would suggest you don't even have to pick necessarily one of these, but pick something that you at least know something about. Okay, so if you know about electronics, then maybe go with this one. If you know about hospitality and tourism, then go with this one. Okay. Create a sample business model to describe how you expect to make a profit from this business. Include these topics in your answer. So pricing, marketing, location, costs, and profit. I'll give you some tips to help you out. So for pricing, either go with like expensive, high quality, or low price and quicker, perhaps, you know. So for pricing, just pick either is it expensive? So basically you need to come up with whether or not you're going to do it expensive and high quality, or cheaper and lower quality, but perhaps faster, you know. So pricing. So for example, if you wanted to do consumer electronics, you could say that we're offering cell phone accessories for reasonable prices, okay? And trying to undercut places like Apple and other places that sell expensive. Okay. Marketing. So who are your primary buyers? So who's going to buy your material? So for example, if you're going to do the manufacturing, perhaps you're manufacturing toys. Well, who would be your primary buyers? Well, that would be like Walmart, Target, places that sell toys, right? So you make the toys, then you sell them to places that sell the toys to consumers. Okay, so marketing, who are your primary buyers? So that's when it talks about marketing. So pricing, expensive or cheap. That's what you need to answer. For marketing, who are you selling to? These are the questions you need to answer. Location. Are you going to be international or international, or is it just going to be a local business or something that's nationwide? Okay, how big? How big? So this is what you need to answer here. So how big of a company are you planning to do, and where do you want to be primarily located at? So for example, if you're doing consumer services, you know, or let's say hospitality and tourism, you might be like, oh, we want to open a hotel in Hawaii, da 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 da. Okay, so it talks about how big and where. Okay, location, costs. So you want to talk about two things. One, startup costs. Startup costs and reoccurring costs. Okay. So what are some of your startup costs? What are some of your reoccurring costs? So let's say you're doing like health, pharmaceutical, and biotech. Maybe you want to open a gym like health. So what would be some of your startup costs? Well, you'd have to lease a building. You would have to get lots of permits. Perhaps you need that building reconstructed in some ways. You would need to buy all the weights and equipment and machines and all that. So those would be startup costs. Reoccurring costs would be like rent, utilities, paying your employees, things of this nature, things that reoccur every month, payments that reoccur every month, okay? Lastly, profit. How does your business plan to make a profit? Okay, so that's pretty straightforward. Basically, you want to talk about two things. Increasing revenue and decreasing costs. Okay, so these are the two ways you basically create profit. you increase your revenue, increase the money coming in, and you decrease costs. You make sure the costs, the amount you pay is low, okay? So those are the type of questions you need to answer, okay? Hopefully I gave you some decent examples and things to think about, okay? All right, once you're done with that, let's move on to the next page. Okay, so from the top, starting a business not only requires capital, that means money to start off is capital, or money for investment is capital, and efficient planning, but also risk management strategies. Business owners need to be ready for emergencies. Insurance can help an owner protect their business from damages and risks. Read more about the different types of business insurance. So you could read this if you want, but you don't really need to. Drag the costs of the table to classify them as direct operational costs or costs covered by business insurance. Okay, so which of these is covered by business insurance? Remember, insurance is if like something unexpected bad happens, the insurance pays for it, okay? So damages to machinery, this would be an example of covered by insurance, right? A machine breaks down. Well, if you have insurance on that machine or warranty on that machine, then it can get fixed and it's not a cost for you, okay? But you do have to pay for the insurance premium. Okay, what would be an example of an operational cost? Administrative expenses are an operational cost. This is something, you know, you have to pay your managers and your accountants and everyone else. These are administrative expenses, okay? This is not covered by insurance. Try to figure out which of these would be covered by insurance and which of these would be an operational cost. Fill that in, fill that rest in. Okay. Aurora owns a toy factory. She's projecting various business costs and needs to compute the total cost of buying different types of business insurance. Using the information on the table, compute the total cost of insurance that Aurora needs. Okay, so we have these different types of insurance and their costs. So general and liability insurance, 800, business interruption insurance, 1200, so on. Let's say Aurora wants to buy a business insurance policy that protects her factory from damages resulting in fire, as well as lawsuits filed by customers. In this case, the total cost of Aurora's insurance will be, so which one of these covers fire damage? Fire damage. Well, that would be the property insurance. Okay, property insurance. So 500. Plus, she wants to be covered for lawsuits. That's the liability insurance. So add those two together and that'll go here. So that'll be 1,300. Now let's assume Aurora wants to buy insurance that covers all damages to vehicles at her factory and any losses incurred from interruption of daily factory operations. So which one of these covers for cars and which one covers for interruption of business? Add those together and that goes here. All right, so I think you can figure that out. A business owner and employer, as a business owner and employer, you are legally required to provide certain benefits to your employees. You can also choose to offer them other benefits. Remember, however, that such decisions can directly affect your overall costs of running a business. Insurance is an example of an employee benefit that most businesses offer their employees. Read more about the types of insurance provided by employers. So you can read that if you want, but you don't have to. The three most common incentives for offering health insurance to employees. So why would you want to offer health insurance to the people that work for you? Why would you want to offer that to them? Well, it increases the employee's health and their productivity. Okay. Also, it helps attract and retain high quality employees, right? When an employee wants to work for you, they'll say, well, what kind of insurance coverage do you offer, right? What kind of health benefits? Do you have dental and vision, so on. Also, it provides the business a tax advantage. Okay, so when you offer those things to your employees, there's a tax break for the owner of the business. Okay. Bob Schmidt, a business owner, wants to offer insurance benefits to all his employees. The table gives information about specific insurance costs that Schmidt might have to incur. Compute Schmidt's total cost of providing collection of insurance packages to employees. Type the correct answer in each box. Use numerals instead of words. Let's say Bob wants to offer an insurance package to employees that covers any outpatient surgery charges, so surgeries, tooth sealants, so dental, and glasses, vision. His total annual cost for providing these insurance will be blank per employee for the year. So we want to add health insurance, dental insurance, and vision. So add those together and that'll go here. Okay. Let's assume that Schmidt wants to cover his employees' expenses in case of disability. He also wants to ensure that a family of an employee is provided for in the event of the employee's loss of life. So if the employee dies, they get life insurance. The total annual cost for providing these insurance plans will be, so in this case, it's disability and life insurance. So add those together, that should go here. For a business owner, insurance is a cost just like any other expense. How does buying business insurance and offering insurance to employees affect the business's profit and success? Well, we already kind of talked about these things, right? Why is buying insurance good? Well, it's risk management, right? Because if your factory burns down, you just lost your business. You just lost your whole livelihood. Unless you have insurance. If you have insurance, then the insurance covers it and they'll reimburse you for your loss. So that's why basically insurance is a risk management tool that allows for, if something really, really bad happens, the insurance is there to cover you, okay? And offering insurance has many benefits as well. Offering insurance to your employees, and we talked about these three things. You could look at part A here, right? What are the reasons why we should offer insurance benefits to the employees? Well, we can see the reasons here, right? Improves employees' health. It attracts and retains good employees and provides a tax advantage. Okay, so these are the reasons. What are the reasons why we want to buy insurance for ourselves, for our business? Well, we don't want to be sued, so we get liability insurance. If business gets interrupted because of a pandemic or anything else, that's why you get this insurance. Property insurance for fires, floods, right? And auto insurance. If your business involves delivery or has, forklifts and everything else, well, you might want auto insurance in that case, right? In the US, I think you pretty much have to, by law, have auto insurance, at least some auto insurance. So just kind of explain these things in this part. Just needs to be a paragraph or two. Explain why those things are important for your business and how they can contribute to a successful business. Okay. Well, with all of that, I hope that all made sense. And if you want to say thank you, then feel free to subscribe and or share this material with someone else who you think would benefit from it. Okay. Well, see you guys next time, and thanks for watching.